Assalamu alaikum. Let's start with government grant. IAS 20 is basically a government grant. Government grant means government give us some benefit in a form of monetary. Monetary terms, basically, the government give us benefit in monetary terms. So this is our government grant. So government basically give us two type of grant. The first is the revenue grant, and second is the capital grant. So revenue grant is basically government give us to meet the revenue expenditure. To meet the revenue expenditure, the government give us a grant, or to meet the capital expenditure, government give us the grant. So there's a two type of grant, which is a revenue grant, which is the government give us to meet the revenue expenditure, and there is another grant which is capital grant. The government give us to meet the capital expenditure, like for example, if we are buying some property plant and equipment, and we don't have enough money to buy property plant and equipment, then government give us grant to buy, or some portion. Let's say I am there is 100 million of asset we are buying. So we have only a 50%, and government is adding 50%. So government is helping us to buy the asset, the property plant in government. So this is your capital grant. If government give you to pay to your employee, to pay your rental expenses and all that things, so this is your basically a revenue grant. The revenue grant is to meet the revenue expenditure, like you are paying to your employee, or you are paying to your rental. So this is your revenue expenditure, and government helping you to in paying to pay your employee, or to pay your landlord. Basically, this is your revenue grant. So capital grant is when government is helping you to buy some property, plant and equipment. So this is your capital grant. So there is a two type of grant. One is revenue grant, and second is capital grant. So, what is the treatment of revenue grant? If government gives you a revenue grant to meet your revenue expenditure, so what is it? What is the treatment? So the treatment is you have to your cash is coming, so our asset is increasing, so cash is debit, and the other income is credit. So other income is your grant, which I am recording as a other income. Like the government give us $100 million to pay our employees. Employee means this is your revenue expenditure, and this is not your capital expenditure, because we are paying. The government is paying to meet the expenditure, to meet the revenue expenditure, to meet your all the expenditure, or to meet your employee salary. So this is your revenue expenditure. So the government give us $100 basically. So the cash is coming, so the cash is debit by 100, and this is our other income, our government grant. So I am recording this as 100, and then I am paying this thing to my employees. So expense debit by 10, 100, and bank credit by 100. So when I receiving my grant, I am posting this entry, and when I am paying my employee, so I am posting this entry. So these two entries is basically the treatment of revenue expenditure. So you are recording your grant as the other income, and then you are recording the expenditure which you have the actually incurred, which this is your expenditure, right? So you are recording the expense debit and bank credit.